The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the September 5th, terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential. Because living up to our potential, folks, that is something we must master each and every day. So let's begin our day with a few empowering beliefs. The first one brought to us by Benjamin Franklin. He once wrote, "Remember not only to say the right thing in the right place, but far more difficult still to leave unsaid the wrong thing at the tempting moment." Think about that, folks. Patience. Patience is what you need. Florida Scott Maxwell went on to say, "You may need only claim the events of your life to make yourself yours. When you truly possess all you have done and all you have been, which may take some time, you are fierce with reality." Boy, I butchered that, didn't I? Let's see if I can do it better here with John Stevenson. He went on to say, "Many people have the ambition to succeed. They may even have special aptitude for their job, and yet they do not move ahead. The question is why? Perhaps they think that since they can master the job, there is no need to master themselves." Ooh, I love that one. You know, folks, the question for each of us is not what would we do if we had the means, the time, the influence, the educational advantages. The question is, what will we do with the things we have? Why? Because you have an amazing power within yourself. And that power, you know what, folks? It's so strong, it's going to take you right over to the homepage of TFNN.com. For all of you that have not signed up for our $10,000 competition, our trading competition, the virtual trading competition, you got to do it now because we are now in real countdown mode. We are less than 2 hours away from you being able to sign up and then claim your prizes. We're talking about 10 overall winners going to receive up to $3,000. First place is $3,000 out there. So 10 payouts in cash. You're then going to have 10 runners-up that are going to receive the best-selling autographed book by Tom O'Brien, The Art of Timing the Trade. In addition, there's going to be another 25 cash prizes, $100. 5 daily randomly drawn folks for just simply signing up and placing a trade each day. Doesn't matter whether the trade is a winning or a losing trade. So you've got great opportunities to win, but you can't win unless you sign up. So right now is the time to do it. I know we've got some folks out there that were too busy to get it done, and now is the time to get it done right this very second. And look, there's other benefits that go along with it. Maybe some of the best benefits are that you are immediately put in as a member to the Tiger's Den. Inside the Tiger's Den, you get to see all of our charts in HD. So all of the hosts out there, it maybe helps to understand we're taking a look at swing point retracement levels or A to B equals CD patterns, or you're taking a look at the Chapman wave and just trying to understand, troughs and peaks and the whole kit and caboodle out there, so you immediately have access to it. What's the easiest way to become a member? Just simply sign up for our TFNN virtual trading competition. Just go to the homepage at TFNN.com. You'll see all the details there. Go over there now, folks. Let's go check out these markets here. Right now, we've got the Dow is up 40 points, S&P up 5, Composite up 11, Russell 2000 up 3, NASDAQ 100 up 8, and the New York Stock Exchange up 22. We've got Goldilocks. Gold is trading off about $7 at $13.82. Silver down 9 pennies at $23.31. Light sweet crude almost flat now at $107.36. Our call number 877-927-6648 to give us a call. We can take a look at your stock chart. I'll do everything I can to answer your questions. So now let's start off by taking a look at the S&P 500. Let's go see what she is doing out here. The S&P 500 now creating a 0.786 Gartley sell pattern. Gartley sell pattern as it runs into the top of the descending price channel. Today is going to be a very telling day. Well, of course, it could flatten out from here, and then it won't tell us a whole lot, but could be a very telling day. Because the question is price going to break above a 0.786 Gartley sell pattern? And the swing points that I'm using in order to be able to create that, the swing point high I'm using is August 26th. The top of that level on the S&P 500, that's 1669.51. The swing point low that we're using in order to create that pattern, that's the August 28th low, 1627.47. Now, that becomes our A point. Our B point here is the one that took place on August 29th. Price moved back down on August 30th. That really set up our A to B equals CD. Remember, when Gartley came up with his Gartley buy and Gartley sell, he wasn't using Fibonacci numbers. That has been added by some of the great work there of Larry Pesavento, and Gartley was just simply using an A to B equals CD, and he was using A to B equals CD a little differently than what we take a look at inside the art of timing the trade. Nonetheless, it is the lightning bolt pattern, and that A to B equals CD has formed. It's been a 0.786 retracement coming back to 1658.87 would be the exact number, but we're not exact here. We don't strive for perfection because we know it's the lowest standard. We just look to be outstanding. So far, the high, 1658.22. So that is close enough in my work to complete that pattern. That's also the dead cat bounce. So we've got a second pattern that's completing right here at the same time that price is moving up into this 1658-ish range. That is a retracement, a 0.382 retracement off the high from August the 2nd out there, 1709.67, down to the low that was put in here on the 28th of August. So this is the place here where you'd normally see some folks get off of the elevator. The key is going to be the price has been traveling inside this descending price channel. What I use as my first touch point, I'm just really using the opening bar here of August the 5th out there. So we've got a third pattern that price has run into. Now, is that important? We got three patterns. The top of a descending price channel, 0.786 Gartley sell, and a 0.382 retracement. Those are all three patterns where price should at least pull back. If it starts to pull back, price could travel down to the bottom of the price channel out there, depending on the candle formation that might exist today. So this is very important for us to be paying attention to. Number one, if price breaks above this area, that would have to make you say, something to think about. And what it would also do is it would also tell you, actually there's a fourth pattern that looks like that has completed out here. That fourth pattern has been a closing of the gap down from August 26th to August the 27th out there. So you got four patterns in essence that have completed right now as we speak on the S&P 500. And if price breaks above that area, that would be signaling to me, strong price trend. In fact, you would then see a move of a move, 100% move of a move. And what will that do? Well, that'll take price into potentially the high of August 26 out there in that 1669. The reason I say potentially is because it may run right into the bottom of that longer-term rising price channel. This is the price channel that takes you all the way back into November 16th out there. So that is the setup right now. All we have to do is be patient. If you're long, you should be recognizing that you're running into a resistance area, and then it's about measuring the pullback from there. And it's about taking a look at the candle. And maybe it's measuring volume. Maybe the easiest way is just go over to the SPY out there. So we're going to do that momentarily. But you can see four patterns having completed right here, and that's very important because if price continues to move higher, at least in my opinion, what that would be doing is that would be confirming yesterday's positive close in the McClellan oscillator out there because it moved above zero. And this is the first day. This is the first play for the bulls out here. We're going to see they're trying to run it up the middle right now. We're going to see if they can get past the 1659 level, because if they can, 1669 would be in the cards. Let's go take a look at the SPYs out here. Let's go see what the SPY is doing right now. That is traveling out at 166.27. It, as you can see, traveling into the swing point from August 26, which, by the way, has 89 million shares. As it tested that area yesterday, did it with 95 million shares. So it was moving into a swing point with volume. How about that? Now, of course, it was dealing with the downdraft that had 158 million shares out there, but nonetheless, it tested that swing point low, I should say, from August 26th with 89 million, and coming in there with 95 million. Well, what's it doing today? It has now officially closed that gap, at least as we speak at the moment. Volume so far, 16 million shares, 45 minutes of trading. If I do my super-duper straight-line math on that, that would be about pretty good volume. So on a day that should be light volume out here, it's got pretty decent volume in the first 45 minutes of trading, because that super-duper straight-line math would put you probably right around Geez, probably around 120 million shares or so out there. So at least a similar volume to yesterday. Of course, we know that the straight line math this early on doesn't make a whole lot of sense. That's not the way that it works out there because you got most of your volume during the initial hour of trading and then really in the final half hour or so of trading. But volume so far, not too shabby out here. If we take a look at the SPY, if we take a look at the trading. Let's see if I can draw a .786 Gartley sell pattern out here. Let's see if that. There we go. So there's your Gartley. Well, that didn't exactly work. Let me try to grab that anchor again. So you can see really similar patterns out here, but the index is what we want to go ahead and pay attention to. There's your .786 Gartley sell pattern. So we can see that also has set up. If this area here does not hold, which I mean by that is a beginning of a move down, or just simply a pause in this move up here, price will move in, test out the high from August 26th. But if it's moving in there with volume, which right now it is, it'll probably go try to test the bottom of that trend line. Trend line versus a channel line. Just take a look at the low of November 16th. Use that 134.70 as your first touch point. And the next area that I would use would be the December 31st low, which is at 139.54 out there. And that's what it'll be trying to get back into, trying to resume that trend out there. So that is on the SPY. Now let's go over and let's take a look at a 120-minute chart of the ES Mini, because this is an important chart for us to be paying attention to. We can see here now a little bit longer-term descending price channel, and price is traveling right up into that area. You can also see that .786 Gartley sell. So we can see the uniformity across the daily charts of the SPY, across the daily charts of the S&P 500. Now we're down to the 120-minute chart of the ES Mini out there. So we've got everything working together, and it is this chart here that we're going to pay attention to, because the question is going to be, if the market is going to break, then we're going to see a break of this chart right here. You could do the same thing on a shorter-term chart if you wanted to, but the 120 minutes is just easiest to be able to fit onto my screen. So we can see that the market is really up against a significant area of resistance. So as your pilot, I'm telling you, fasten your seatbelts, folks. You want to put on that fasten seatbelt sign, because you could get a little bit of turbulence here, and we'll see how these markets here want to resolve themselves. What we can see is right now on the 120-minute chart is prices up towards that overbought condition. Not totally up there just yet, but it is up towards that level. Reading on that 14-period relative strength indicator right now is about a 67.5 out there. Once you hit 70, you start to get into a overbought condition. So moving into a area that has some significant resistance as you're getting into overbought, that could be some trouble out here. But we'll see how this plays out. The 120-minute chart that we're looking at, this pattern here, this candle would not complete until 11:30. So that'll be during halfway through Basil's show out there. So that is on the ES Mini. That's a complete look at the S&P 500. Folks, please head over to the homepage of TFNN.com for any of you that have not yet signed up for the TFNN $10,000 virtual trading competition out there. Even if you're not going to do it, go sign up, because you're going to get access into the Tiger's Den. And you want to do that. In fact, you can take a look at the archives in the Tiger's Den. So if you're just listening in because you're working during the day, you don't have time to access it, but you listen to some of the shows here at TFNN because you're trying to educate yourself and you're trying to learn from us educators out here, then you want to make sure that you have access to the Tiger's Den archives right now, because these charts, they're clear as can be. They are in HD out there. 877-927-6648. Be right back, folks.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. TFNN is having an open house in the Tiger's Den for 2 weeks, and the best part is that everyone is invited and you just have to be a member at TFNN. The open house in the Tiger's Den has already begun and will last through our week-long virtual trading competition, which ends September 13th. Use this time to exchange trading ideas with other traders in the virtual chat room and to discuss trading strategy. For all the information and to take part in the Tiger's Den open house, log on to TFNN.com today. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. TFNN has just announced our first ever virtual trading competition, and we're giving away $10,000 in cash prizes, and it's free to enter. Sign up by Thursday, September 5th at noon Eastern, and the trading competition will take place the following week, Monday, September 9th, with first place winning $3,000. Don't delay, as you won't be able to register once the competition begins. Sign up now and reserve your spot in TFNN's $10,000 virtual trading competition. To sign up and for all the details, log on to TFNN.com. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 29. Get your seatbelts fastened. We're running into some turbulent air up here. S&P is up 5. Composite up 11. Russell 2000 up 3.5. We'll go take a look at the rest of the indexes here in a moment. You might remember back, when was it? The actual trading session was on July 30th when all of a sudden all of the fertilizer stocks got just simply slammed. What I've got up on my screen are 6 of those. The 6 being IPI is the first ticker symbol. That's up in the upper left-hand corner. That is Intrepid Potash. You've got SQM in the lower left. That's Sociedad Químico Mineral. So I could totally screw that up. We'll just call that SQM. You've got Rentec Nitrogen, RNF is a ticker symbol. Potash, POT is a ticker symbol. Mosaic, MOS, and Compass Minerals, CMP. So let's take a quick peek at each of these stocks out here. Let's start off with, well, we won't look at each of them necessarily, but let's look at 2 of the more popular ones. Potash, POT, is the ticker symbol. See if we can get any clues out here. Now, this thing gapped down with just simply massive volume on July 30th, 106 million shares out here. What we can see is one small sign of strength inside this equity. That first little sign of strength came in on August the 26th. Not enough of a sign of strength to end up volume-wise up there was 13.7 million shares out there. Not enough to really step back in, but it was actually a sign of strength and a potential signal for a change in trend out there. Potential signal. You'd need to see another pullback. You'd need to see another sign of strength. But these would be dangerous to play in here. We've not seen much in the way of a sign of strength out here inside potash. If we take a look at the weekly chart out here, let's see what has been done on the weekly chart. So we take this back. What we can see is it's made that 100% move of a move out here by getting all the way back to the July of 2010 swing points out there. Now, there's a little sign of strength inside this thing. This was back on August 20th of 2010. But you can see this wall of worry that it's going to have to climb off the bottom. But nonetheless, you should be watching these. Watch for some signs of strength on these. Then they might be worth playing out there. But we haven't really seen that inside potash. Let's take a look at Mosaic out here. MOS is the ticker symbol. Where is that? MOS out here. There we go. Again, all of them have similar patterns, but potash did show one little sign of strength. Do we see any sign of strength really here inside Mosaic? Nah, not really. I mean, a smaller sign of strength. Now, in the case of Mosaic, though, if Mosaic can get above the gap here, and that would be at the price point of $43.99, that might be saying something. Of course, the black line on my screen, that's the 8-day exponential moving average. I wouldn't use that as a trading vehicle here as a level of support, but no real signs of strength inside Mosaic. Let me just put these all six on my screen here, a quick scan, see which one might look the best out here to the upside, if there is one. I would have to say it probably would be this SQM, and I butcher that name, so there's no reason for me to go in and take a look at that. And so we are seeing a potential change in trend here. Now, this should pull back as we take a look at the relative strength indicators out here. Well, I'm sorry, it should not pull back just yet. It got into the extreme oversold condition. I was looking at the wrong line out there. So I take that back. We should see some type of small pullback that would take place in this equity here. SQM is the ticker symbol. If we go from the low to the high that's put in today, this thing should pull back to about the 25.86, 25.37 mark. And then if you could see some kind of sign of strength, one might make you say, something to think about. Anyways, this would be true bottom fishing, folks. This would be true bottom fishing. And that is on the fertilizers out there. Let's go take a look here at the rest of the indexes, get a feel for what's going on out there. We really took apart the S&P 500, but let's go look at the strength inside the marketplace. Well, that's going to be the NDX 100. So as we take a look at the strength, well, there used to be weakness out here. We saw the island reversal candle, and I'm going to go ahead and delete that right now. You know why? Because the ship got back to the island, picking up passengers yesterday. In fact, if we take a look at that reversal candle from August the 27th out there, that little island reversal. You can see the swing point, August 26th, has volume. Well, I don't have the volume actually on the index. We'll take a look at the Qs out here, so my apology. But you can see the low was 31.18. Price closed that gap yesterday, got inside there. The boat is picking up passengers. It's going to at least go test the 31.47.87 level. If it gets above that, it'll sail seas to the northern ports out there. And where will those ports take us to? Well, if we take a look at price options out here, depending on volume, the A point on this could be June 24th. Your B point, well, that would be your high here from August 13th, and your C point all the way down on August 27th. One thing at a time. We get back, we'll go take a look at the Qs. We'll benchmark that volume for you. Be right back, folks.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at Nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Must be all those bulls and bears listening to us at TFNN right now. The Dow just about to go negative. It is up $1. The S&P is up 2. NASDAQ up about 6. I did say that it was going to get turbulent, didn't I? And of course, there was nothing more than taking a look at those patterns that we've got out there. We'll go back and take a look at the ES Mini and a few other things. But we're going to stick here with the Qs. Now, so we take a look at the Qs, what we have to pay attention to. Remember, my take on this is that right now, we have seen patterns complete that should act as resistance. So when you act as resistance, you got to look for some clear air. Well, the air doesn't clear inside the markets until you do a retracement. It means you're going to be in the retracement on the intraday charts, on the 30-minute charts. That's really what I consider to be one of the best ones to be able to use to pick out those zones out there. And my expectation is that the market runs into a turbulent area, goes ahead and pulls back before it attempts to run higher. Now, the key today on that is going to be that the New York Stock Exchange, when it finishes its session, that it does not have more than 628 net declining issues. If it does, folks, and you were wondering when you should jump on the short train, well, I just told you when. You jump on that short train right then and there, because that'll be a major failure, a fumble on the 5-yard line, and the Bears, they'll be able to go ahead and take it, and they'll be able to keep that ball for as long as they want. Now, in the case of the Qs out here, the Qs, really important. Yesterday's session was very important because what it did was it negated that island reversal top out here. That island reversal top that was created over the 4 trading sessions of August 22nd through August 27th out there. Created that island top. The ship is back there rescuing passengers right now, trading up into that swing point of August 26th with some good volume. The downdraft had 40 million shares to the downside, up yesterday with 27 million shares. Nonetheless, you're still inside that swing point until that swing point is rejected. It says it wants to test the highs of 77.28. Of course, if we take a look at the actual swing point highs at 77.28, let's see, or is it 77.28. Now, if we're to see a close above 77.28, and if it's with volume, meaning more than 27 million shares, guess what? That's an A to B equals C to up. But you've got to take things one thing at a time. I suspect that is what may possibly be underway here. But we need the market to really give us information. And that first information is going to, there's really 2 pieces of information. It's going to come from net advancing or net declining issues, but it's also going to be coming from the VIX, which we'll take a look at. So if, in fact, that area gets taken out, where does that send price up to in the Qs? Well, 79.41 becomes our 1 to 1.272 A to B equals CD. That is coming off of the swing point from April the 18th. That's your A point, your B point. May 22nd, and your C point is that June 24th level out there. And that's where the first level of price would head to. That's if, in fact, it can clear the 77.28 level. Has not done that. Now, let's go take a look at the good old VIX index out here. Let's go see what that is trading at as we speak here, because that is going to be real key to any continued move up in the markets. Right now it's trading at 1586, so it's a work. It needs more work to the downside in order for that to come to fruition. Why? Because it's not until the VIX gets below that 50-day exponential moving average, which right now is at 1475, so it's got $1.10 to go to get down there. So, and you know what, folks? I just realized we've got the 90-minute drill on, if I didn't say that. The 90-minute drill is you've got now less than 90 minutes to sign up for the TFNN virtual trading competition. So get over and do that, because at 12:01 p.m. or 12 p.m. plus 1 second, I should say, you will not be able to sign up. That means you won't be able to take advantage of the Tiger's Den. So even if you're not going to trade, go over. The easiest way to get advantage of that is just sign up for the TFNN $10,000 virtual trading competition. Takes all of about 15 or 20 seconds, and you can get the archives of this show here and see all of our charts in HD out there, and that is worth its weight in gold. Goldilocks out there. Speaking of Goldilocks, she's down $15 right now, and silver is up 20 cents. So we'll go peek in on them in a moment. But let's continue on with the indexes here. Let's go take a look at Mr. Weakness. That was the Dow. But the Dow right now, that is trading out at 14,934.56. A close above 14,939.25 would signal to me a potential change in trend. However, look at what the Dow has done here. You don't think these trend lines, these channel lines are important, do you? Take a look at the old Dow here. We can take a look at the price channel, this descending price channel that it's been traveling in ever since the high of August 2nd. Now, I'm using my August 5th open as my beginning point out there, and that open was at 15,651. That becomes my first co-located, what we'll call open out there. The second one that I'm using right now is on August the 14th, and that is at a price point of 15,447 out there. The bottom, fairly well cemented here. You can see you're using the close of July 23rd. You're using the close of July 24th out there. You're running right into the close of August 19th. You're basically using the open of August 22nd. So I think the bottom is pretty well cemented, and that's why I've got the, this is a parallel line, and that's why I've got the top at the area where I do. And you can see price here this morning moved right up towards the top of that descending price channel before it gave it up. Right now, traveling below the swing point of, not really the swing point. The downdraft is what I should say from August the 27th. The high of that was 14,939.25. But it closed today above 14,939.25. And so long as the net declining issues are less than 670, what did I say, 678 out there. What that actually would set up is at least a, well, if it can break the descending price channel, that would set up a move to about 15,104. But we'll take things one day at a time, one moment at a time. Now let's go take a look at the Russell 2000. Russell 2000, take a look at all of these things are running into these price channels out here. Take a look at the Russell 2000 now. Its price channel coming off of the high, coming off of the close from August 5th. That close out there was at 1063.01. So we can see price today moving right into the dead cat bounce, 0.382 level, and right into the top of that descending price channel. And what's cool about all this, bullish or bearish, is that we're very close to being able to get some types of signals out here. Now, in the case of the Russell 2000, the Russell 2000 is back inside its trend line. It broke the trend line once back on June 24th, and then post-haste got right back inside there. That told you the strong trend was still underway. It broke through the price trend line here on August 27th, got back inside it 2 days later, back down below on the 30th out here, so it's right back above inside that rising trend line, and that's an important trend line because the longer trend line is the one that we need to be paying attention to. So right now it is inside of that, and we want to be paying attention to the Russell 2000. For pieces of information out there. As I go back and we take a look here at the New York Stock Exchange, we want to pay attention to that as well. Let's see if that has closed its gap out here, and it most certainly has. So potentially its work to the upside is done. That was by getting and tagging the bottom of August 26 out there. That low 94.2583. So far intraday, we have seen a move higher. The intraday high was 94.3067 out there. You can see here the oscillator reading had finally moved above zero, but it's going to be very key for this to stay above zero, and it's going to need the VIX to participate in its move. It's going to need the VIX to continue moving lower in order for prices to move higher. Goldilocks, I mentioned, was down about $18. It's now down to $20. So that is a beautiful thing, folks, because what you want to see here is you want to see this pullback in gold. Of course, we got that bearish engulfing candle. Remember, the bulls and the bears, they can't hide out there, so you want to make sure that you are always using the message of the markets to help you in your trading. In the case of Goldilocks, we had the bearish engulfing yesterday. Today we're seeing some follow through. We got time left in the trading session out here, but gold should pull back to 1336, 1276. And I'm going to say right now, I'm thinking gold's probably going to come back to between 1336 and 1348. So somewhere right in there before it may actually set up its next buy opportunity out there, and that will be a beauty out there. So we'll see if that's the area that holds, or if it can go, or if it pulls back a little bit further. But it looks to me like that might be the target area right now, about 1348 to 1336 inside of Goldilocks. Silver, on the other hand, if we take a look at high-ho silver, the pullback on that says 22.47. Maybe all silver does is make a 0.382 retracement before it begins its next move higher out there. What silver is doing, and I like the way that this is acting, we can see that really this got into a overbought condition back on August the 15th, and right now it's just trading into that August 15th candle. In fact, it's really just trading into the highs of that, which are $23.19. So not much of a pullback after getting into what we'll call that extreme overbought condition out here. So I like to see the pullback because it really sets up the next buying opportunity in all those mining equities as well as the metals out there. Let's take a look at some of these stocks here that are popping and dropping in the marketplace here. We got Cons Inc. CONN is the ticker symbol, and that is down about 9% here this morning. I thought I had it there. No, I got to hit show down. There we go. So look at the volume coming out of this thing here. 3 million shares thus far, gapping down. It is below its most recent swing point, which was on August 19th. That had 684,000 shares. So a $61 stock. Now, the problem with this equity, it's not bad, except for today, volume off of the highs, right? So volume off of the highs, and it's got a breakout session that will take you all the way back to April the 3rd. However, the price point of that breakout was about $41 at the high, $37 at the low. It looks like that may be the target for Cons Inc., CONN. Looks like they they're out with numbers. A net income not too bad, 1916 versus 11.6 million from last year, but maybe they're guiding poorly out here because the market is taking this thing apart. And this was at all-time highs just 2 trading sessions ago. Made those highs with 537,000 shares and 1.2 million yesterday, but to the downside today with over 3 million shares. Let's take a look at Biogen, BIIB. Alex in the den said that IBB, which is the ETF for these stocks here, was I believe might have been at all-time highs. Maybe we'll take a look at that here. But if we take a look at Biogen, one of the top 5 holdings in here, Biogen has got some resistance. It's not up to that resistance level yet. We need to move this line down. Here's the resistance level, really, which is the beginning of the downdraft session from June 3rd out there, 2.4 million shares to the downside as it first got up there to test that level, did it with about the same volume, 2.4 million shares. Yesterday, this moved up with, is that right? 1.9 million shares, okay. So 1.9 million shares. So coming into an area of resistance on lighter volume. Hasn't made its way up to the top there. In today's candle, not a bearish candle, although it's a leader in the clubhouse, almost a leader in the clubhouse to the downside off $3.55. Let's go check out X1. That is to the downside as well. That's one of the 3D software companies out there. XONE is the ticker symbol. So that is down today. Let's see what kind of volume is behind this move out here. Let's pull the stock chart up. So far today, down on volume of 400,000 shares out here. It's trading and tagging that little downdraft session. And the first time we saw some real volume off of the top out here, or I should say most recently, would be July 16th, and that's what it's trading into, the top of which is 65.95. It's so far rejected that area. It's got volume of 2 million shares. It's coming and testing that so far, 400,000 shares, an hour of trading. So it's coming in there with some pretty decent volume. Maybe X1 gets back and tests the 55.50 level. Of course, the danger thing here is the high volume bar on this takes you all the way back into the actual IPO date of February 7th out there. That's probably not the target for it, but most certainly could get back into that May 13th, May 14th level at about $49. Right now trading at $66 out there. Let's see, what do we have to the upside? We got Google lead the charge. That's up 560. So let's go into my core stocks, my core holdings here. Let's take a look at that. Core holdings here. We've got Google. See what it is doing. Google breaking the trend line here. So that is a positive inside the NDX. As we take a look at Google, the trend line that I'm looking at coming off of the highs from July 16th, it is up above that level as we speak today. What it's trading into is its most recent, it's trading right in here into this downdraft. That's what it's doing. So it's running right into a supply line from July 19th. That had 7.4 million shares to the downside. And the low of that is 875.61. It's trading right now at 877.19. So even though it's broken that trend line there, almost more of a channel line that I have. Yeah, it's more of a channel line that I've got drawn in there. It's running right into the supply line. That is on Google. As long as we're in here, let's take a look at the rest of these stocks. Let's take a look at Microsoft. Microsoft right now trading out at 31.21, trading below that high volume bar. That was set on July 19th, and the low of that is 31.02. I'm sorry, it's not below it. It's right into it. 31.02 is the level. So today's an actual test of that area and a test on light volume. So that's actually positive for Microsoft. We'll see if it can just simply base out here right around the 31.02 level. That had volume down there of 248 million shares. Today, you've only done 29 million shares. So yesterday's total volume, 98 million shares, and 98, but it did not test the actual low of that downdraft day. Today, it's actually testing low. So if it could hold 31.02, that would be positive, not necessarily a buy. That would just simply be positive out there. That's with regard to Microsoft. Let's see. Let's take a look at Intel. I know Victor likes Intel, and I said, hey, Victor, maybe not so fast here. You can see it's really just dealing with the resistance line. It used to be an old support line that was set up by that July 10th hammer candle at 2264, trading slightly below that right now. Dow is, look at the markets are flat. Let's go water skiing. In fact, let's go barefoot water skiing, folks. We'll be right back.
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter,
Patterns, Profits, and Peace of Mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow is up 17 points right now. S&P is up 4. Composite up 7. Russell 2000 is lagging out here. It is up about a full point out there. So let's try to set things up for the day. Very first thing on your list is if you have not signed up for the TFNN virtual trading competition, $10,000 in cash rewards being handed out. Go do that right now, because we are now down on, about 70 minutes or so. Not even. We're talking 66 56 minutes for you to be able to sign up. So don't delay. Right now is the time to get over to TFNN, sign up for the virtual trading competition. That's the first thing you got to do. Number two, what we want to do is we want to pay attention to the ES Mini, in my opinion. We want to pay attention to this 120-minute chart out here because it's got a really nice price channel that it is traveling in. It is bumping right up against the top of that. And while it's doing that, it's creating that 0.786 Gertley sell pattern. So now the key is, will this form a bearish reversal signal? Because without that, folks, then it tells you the bears don't have a lot of energy, and we could just see a move sideways. This thing has been moving sideways, in essence, since about 1:30 in the afternoon yesterday. So sideways move says what? It's going to build up energy to do what? Probably try to bust out to the upside here. But thus far, that has not taken place out here, so we're going to be paying attention to the ES Mini, the 120-minute chart. Got up to 1658, and at 1658, it was 1658 and a quarter is the high. Ran right into that resistance of that descending price channel. So that's number two that we're going to be paying attention to. Number three, we're going to be paying attention to net advancing issues inside the New York Stock Exchange, or net declining issues as well. Right now you've got minus 193. You see a minus 678, and that is and if you wanted to go short, that's the time to do it. That is absolutely the time to do it. So you want to be paying attention to that. And if you're long and you just went long, you would want to become a fingernail biter, because that would not be a good scene for you, just simply one day over that area. Number four, you want to be paying attention to the VIX index, because as long as that VIX index is above the 50-day exponential moving average out there, that is where damage is done in the marketplace out here. Right now, the VIX is at 1575. If it gets below 1475, just like earlier I said, here's the parameters to set up to load up the truck and go short. You get below 1475 today. That's $1 down below where it's at right now. I don't suspect that's what we will see, but if you do, then go ahead and load up the truck. Load it up all the way. Now, would you go along the Dow, which has been the weak laggard out there? Nah, I don't think so. I'd start taking a look at the Qs, the NDX, probably the Russell 2000 would be the two places where I would look. Maybe the XLK inside the S&P 500 sector out there, something along those lines out there. So those are the parameters that we want to be paying attention to today. Let me see, is there anything else? No, on a pullback. Yeah, on a pullback, we can take a look at those patterns that were set up here inside the ES Mini. You can see the 1 to 2, A to B equals CD that had formed. That was coming off that little hammer candle here at 3 o'clock in the afternoon on September the 3rd. So the 1 to 2, A to B equals CD, that completed. Of course, if you don't have the art of timing a trade, if you do sign up for the $10,000 virtual trading competition, there's going to be 10 given away with a nice personalized autograph from Tom O'Brien. So the market's doing what it should be doing, but on that 30-minute chart, you need to see a close below that 10 o'clock open, which was at 1652.75. Any close above the high of that candle, 1658 and a quarter, that is a continuation move to the upside. So that is the other parameter for us to be paying attention to. So, folks, it is Terrific Thursday. Stay tuned. We got Basil Chapman up next. Then we got Larry Pesavento, Daryl Martin, David White, Andy Hecht, and the Tom O'Brien Show. Folks, always remember this. The way you do anything, I guarantee you, it's the way you do everything. Do not be a prisoner of your past. Instead, be a pioneer of your future. Have a great Thursday, folks. Look forward to seeing you in the morning. Take care now.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.